How many of us are going to be talking about AI 3 years from now? When was the last time someone mentioned the cloud or Internet of Things or big data?
That's Steve Cox, CEO of Clari Salesloft. He's a leader with a dozen mergers behind him and is currently integrating two of the biggest brands in GTM tech. In today's episode, we explore why hot AI startups are on shakier ground than they may first appear, and why SaaS is far from dead.
Can I just start a company tomorrow, hire some AI engineers and build some agents to solve a single problem and then call myself an AI company? Where's the longevity in all of these companies?
And Steve is right to have doubts. He shares how AI startups are landing on his desk, unprofitable, out of funding, and up for sale. Plus, how Steve is merging two rival companies without one culture eating the other, and the one non-negotiable trait in every executive he hires. All this and a lot more. Welcome to Top Line.
Hey everybody, welcome to Top Line. It's Sam Jacobs. I'm back. I'm the CEO of Pavilion. I'm returned from a brief hiatus, but I'm excited to be joined, as always, by my wonderful co-host, Asad Zaman, the CEO of Sales Talent Agency. AJ Bruno has a bit of a family emergency that he's taking care of. Don't worry, everybody's okay, but he's got to handle his stuff at home. So it's me and Asad, and today we're joined by a very special guest. It's Steve Cox, the CEO of Clari Salesloft, the leader in revenue orchestration. Steve's path is anything but typical. He left school at 16 in Essex, England, sold bananas for a stretch, which is incredible, spent 4 years driving a taxi, and taught himself enterprise technology entirely on the job. He's gone on to lead more than a dozen M&A integrations, turning complex multi-company deals into unified growing businesses. He took on the CEO role in December 2025 to bring together two of the most recognized platforms in the category, and is building what he calls the world's first predictive revenue system. Steve, welcome so much to Top Line.
Thank you very much. Appreciate you having me.
Steve, bananas, taxis. That's the first time in the bio on this show somebody has had those two things. That's really interesting.
I left school when I was 16 and I needed to get a job before I wanted to drive a taxi. That's what I wanted to do. And I needed to find a gap for a year. And so I had a friend who owned a market stall and they sold bananas on the side on a little cart. And I went and did that for a year. So, that was my first kind of foray into the world of sales.
What did you learn about SaaS sales from driving a taxi?
I'm not sure I can drive some correlation, but I think one thing I did learn that always helped me from driving a taxi was that you have a very short time to make an impression on people and build a relationship with them so that you get a good tip at the other end. So I learned a lot about how to read people and how to interact with people, and so body language and tone and things like that. So I think that served me well throughout my career.
Tonality, volume of voice, all those things. That's really interesting. Well, that's the most interesting background somebody has had coming into the show, and we have really interesting things to talk about. So the first topic today, Sam, for your first topic back after a few weeks off, is how does a SaaS-era company beat an AI-era company that's trying to do the same thing? So Salesloft is one of the most legendary companies from the SaaS era, broadly speaking, and in go-to-market, it brought this new way of developing top of the funnel to the market. Our friend Kyle Norton, who hosts the Revenue Leadership podcast, I think was one of the first 10 customers of Salesloft, and a big fan. And so Salesloft was huge and meaningful in terms of go-to-market. But now if you look at it today, you've got a few things going on. You've got competition from all the SaaS-era companies that came up that were trying to do the same thing. There was Outreach, but then there was also people like Gong that were making their way into your world. And then in the AI era, you have these really well-funded, fast-growing companies like Monaco that are also trying to take your market share. And you're sitting there and your calculus is, how do I beat competition from all of these sides? What are my comparative advantages? What do we do? Bring us into your world. Like, how do you think about solving this problem? How do you win against both of these vectors?
Yeah, I mean, look, it's an interesting time, right? I mean, I think you've seen us go through, the SaaS apocalypse, and I think we saw that play out in the stock market with, share prices getting, dramatically slashed. And I think, we now see a lot of, talk around Anthropic and, OpenAI have filed their S1 and, we're talking about $1 trillion valuations. It's an interesting time for us, right? Very prominent in the SaaS era. I think both companies, Clari and Salesloft. And I think what we've now seen is this situation where, we've got a lot of native AI startups coming into the space. And, I find it interesting. I mean, you mentioned Monaco, for example. I don't know if you've looked at their website recently. When you land, the first thing you see is like, their investors, and so their credibility statement is to talk about their investors. And I find, when companies talk about their investors or they talk about the companies that they serve, that's normally because, they lack necessarily, innovation in terms of product. And I think it's very easy to kind of do, good, shiny demos that solve a specific use case. But like when you think about actually building something that, really adds values to companies, I think you have to look a lot deeper than just, money, startup, who's backing you, what companies you serve. And I think, this is where the data really starts to play into it. And I think, we've seen this before. I mean, no different from the on-premise, to the cloud hosting, from cloud to SaaS. We've been through the themes of, big data and IoT, and, now it's AI. And I think, a lot of companies that we talk to, have gone through this phase of pilot and test. And I think there was a recent study done by MIT that said, 95% of AI trials, have ended in, not being able to show proven ROI and actually not be cost efficient. And I think, there's a lot to unpack there. But, we are building, what we think is going to be the first predictive revenue system, built on the, billions and trillions of interactions and signals that we've created over the years. And I don't think that's something that you can shortcut, to get to a real answer.
You've done this a bunch of times, and that's one of the things that's so impressive about your background is coming in to an organization. You're not, based on what I know, besides the banana venture, most of the time you're not the founding CEO. And so you're coming into this organization. Talk about the playbook that you deploy to, when you're new, to figure, as you said, right? First, like to make the right impression with the team and to win their buy-in and their commitment. And the second is the strategic review of figuring, okay, these are the assets, these are the strengths that we have as an organization. This is where we're going to focus, and this is where we have a right to win. Do you have a series of best practices to do that? How do you think about, because it's a very difficult job and you've done it successfully multiple times, so it's clear you probably have a point of view about it.
Yeah, I do. Look, I don't want to sound too corny when I say this, right? But like, it starts with the people, right? And I think, you've got to get out and you've got to go talk to the team. When I was over in the UK, I turned up. It was my first visit, and being the CEO, they kind of labeled an office for me and set me up in there. And I was like, I don't want to sit in an office. Like, put me somewhere, with the people. Like, sit me somewhere with a team. And so I started to sort of ask questions and start to understand. And I think I think it was like my first 90 days, I met with over 300 people, like in the organization. We were fortunate that we had RKO, so I managed to sort of get through a lot of people there. So a lot of listening, a lot of understanding. Obviously, there's a lot of perspectives. I think the other thing is as well is it's understanding who wants to be part of the organization going forward, right? I think that's one of the things that people, it's that kind of trade-off between sort of brain drain and like, retaining people that actually want to be part of it. And one of my opening statements I always say to any organization that's done a merger or, an acquisition is, the people didn't necessarily choose to be here, right? And so just because, you're now part of this joint organization, you might have liked working for a VC-backed company or, a private equity-backed company or a private company. And now you've sort of been thrown into this. And so I think it's quickly, important to identify who wants to be in and who wants to be out. And then I think, from a leadership team perspective, I mean, you'll notice we've hired a completely new C-suite. And, none of those people I've worked with before. And I think there's a couple of schools of thought here where people say, oh, we like an executive that brings a whole management team with them, right? Because they know each other, they can move and operate quickly. I have like, a counter view to that, which is great. But when they leave, they'll take them all with them, right? Which creates you a future problem. But I also think you need different people for different environments and different times of a business. And so when you look at, what we have now, much larger business, opportunity to scale, need a different level of experience. And AI, meaning that, we are going to build differently, build faster, and build better for the market. That to me kind of means we have to bring in a different set of people. So listening to the people, listening to our customers, meet as many customers as possible, and then start at the top by building the right team, with the right kind of, I have a certain set of criteria that I look for in executives. And probably one of the most important for me is low ego, because I think, high ego kills innovation and kills speed. And so I tend to focus in on that. And that helps drive the culture from the top down.
Sadly, that means Asad probably won't be working for Salesloft plus Clari.
I have I'm listening and I'm thinking of what does it take for a SaaS-era company to win? Because like I want them to win. There's some part of this, like it feels very romantic that the companies from the previous era will figure it out. It's like the David and Goliath story a little bit right now. And I guess the question that keeps coming to my mind is winning downstream of convincing the employees that want to stay and you want to keep the prospects and your current customers that we have now become an AI company? Like, is that the core first? Like, is that the big umbrella thing that has to be figured out and everything is downstream of that? Like, your perception has to be that they were born in that era, but this is an AI company and this is going to give us AI advantages. Is that the thing?
I'm not so sure it is, to be honest. Like, I think it comes down to the age-old thing about value, right? Like, how do you really drive value? I mean, people have been trying to solve, we're talking about rev tech, but pick an industry, right? But people have been looking to solve rev tech forever, right? Like, how do we build a product that makes it easier for salespeople to go do their job, find more customers, sell more, help the business grow, right? That's always been the nirvana. And to suddenly think that AI is going to come along and is going to be the answer to everybody's problems, and let's wind forward 2 years and we'll have this great AI tool that will do everything, right? Is probably not the reality. And for me, I think there's a journey that we go on, and you saw this with the transformation to the cloud and the original SaaS era. Like, even if you look now, there's a lot of companies that made the transition, right? I mean, it's hard to think of many big companies that didn't make the transition from on-prem to cloud. And then there's obviously the born in the cloud companies, that grew up that way. And I think there's a place for everybody. And I think what's very interesting about AI right now is, in the tech industry, we're very good at getting people excited. And like, we started on the hype curve of like, AI is going to solve all the problems. Suddenly we saw budgets get slashed for software and everybody wants to spend their money on AI, which is still software. But, AI budgets are easy to come by. People have run pilots, they've run trials, they're not seeing ROI. And it's my view in that now what's happening is we're seeing a transition back to having conversations with your incumbent vendors to see what they're doing about AI. And so it's like, how can you as a traditional SaaS provider help layer in AI? Because I think one of the reasons we see the ROI challenge is adoption, right? Like, I can build stuff every day and release every day. But, I think, one of the old stats was like most people use about 25% of all the software tools that they have, right? And so now you just keep releasing more feature, more feature, more feature. Do you end up with a better system, or do you just end up with feature blow? And so I think AI has kind of pushed us, even further into that. And so for me, it's not about transforming from a SaaS to an AI company. It's about how do we layer in AI across our traditional workflows to make it easier for people to do their job and get more value out of our system and have more time doing what they want to do, which is get in front of customers and sell.
Sam, this is a different perspective to what you hear in the market. Like, it feels like the easy position to take is AI, right? And this is actually a very interesting, like, nuanced way to look at this, which is, yes, we need to use AI, but it's about something beyond that. Like, AI is not the end goal. The end goal is like value. You don't hear a lot of SaaS-era companies say this. It's interesting, right?
Yeah, I mean, that's my question back to you, Steve, is sort of to the point. When I zoom out, I think it's very easy to talk about market trends or market indications. that are hype based, right? That, it's an AI company, it's not a SaaS company, it isn't native AI, but fundamentally it comes down to solving customer problems, and then fundamentally from there, the way that you're solving those customer problems shows up in the financial performance of your business, where you have retention or you don't have retention. Are you thinking about winning in a different way than you might have thought about it over the last 10, 20 years? Or is it for you, whatever the valuation is, that will be reflective of us executing over the next couple of years? I'm not gonna worry about where the market's trading today or tomorrow. All I'm gonna worry about is whether my customers are renewing, and I'm doing a good job if they do.
Yeah. I mean, that's exactly right. It's all about, it's all about customer sentiment, right? And renewal gives you the best answer on customer sentiment. I mean, the amount of AI native companies that come across my desk now that, are up for sale, they've run out of funding, they've done the first round. And when you look at them, they all have a similar profile, which is, they went to market, they grew to 2, 3, 4 million of ARR pretty quickly and then struggled with retention. And so if I think about what's changed in the last sort of 10 years, I think now it's, we're in one of these cycles where everybody knows that AI exists. A lot of people understand AI is going to drive a lot of increased productivity and a lot of financial benefit. They just don't necessarily know the how. And so I think the adoption and driving adoption has become, more important than ever. I don't think throwing more tools at it is the answer. Like, I think, from my point of view, it's like the workflow is the workflow, right? And, there are things that change and move as we go through the workflow, but there's a lot of similarity to it. And, for me, it's like, how do you embed AI into that workflow to be able to make the process easier, simpler, more efficient, and not necessarily lay in more point solutions, because somebody has to orchestrate them, which, is an interesting point. We talk about, revenue orchestration, and, and an orchestra needs a conductor, right? And the conductor's the person that gets everybody to play and tune on the right time, with the right tools and the right solutions. Well, not everybody can be a conductor. And so I think, thinking about like this platform play and like how you can leverage, what providers like us that serve, thousands of customers over multiple years with a huge data set and the context we can provide. I think that's what ultimately, differentiates us and how we position ourselves.
How much do you have to think about which part of the market you focus in on? Because if I think of different players out there today, you look at Clay. There is a barrier to entry to using Clay. Like, it is not an easy tool to use, right? You will have to engage some sort of expert that's going to cost you a bunch of money to really be able to get Clay to be used properly, to the point where they had to come up with a role related to it, right? Like the go-to-market engineer, they had to like invent a role to be like, you need this person to be able to use this thing. That's like pretty complicated. So if I look at my business, which is, we're about 20-ish million in revenue this year, it's still far away for us. Like, we don't feel like, oh, that's an investment we would make. I'm curious how you think about this, like the ease of use, and how you try to balance the impact that you can have, the value you can drive, but being able to be easy to use for your customer. Or is it that you just focus on larger customers who are willing to hire a go-to-market engineer and hire these people to be able to use the product? How do you create this? Well, how do you balance this?
Yeah, I'm smiling as you say this because it's kind of back to the old days of like custom dev shops, right? Now we just call them forward deployed engineers or revenue architects or, whatever label we want to put on it. But really what you're doing is you're building a customized solution on top of it. The problem I have with that is the fact that, not everybody's a great architect, right? And like, I've kind of picked up on this phrase of like, just because you can build it doesn't mean you should, right? Like, I have all the tools in my garage to build a car, right? But like, you wouldn't want to get in and drive it with me, right? But I have a friend who could build a great car because that's what he's really good at, right? And so when I think about like, when you think about where you serve in the market, now, especially with AI, and talk about agent to agent conversation, you talk about things like Claude and ChatGPT. I think underlying the logic layer and the context layer remains the same, and then I think on top of that, you have the opportunity to build a skin, right, that's suitable for SMB customers, mid market, where they want something that's more configurable out the box. And then really, to use the phrase, headless system, being able to provide access to that logic and context layer, the intelligence, through however you want to consume it into enterprise. I think that's the kind of approach that you have to look at now going forward. Because to your point, there's not many mid-market companies that want to get into the fact of owning, architecture and design and taking the platform and integration and putting all of these point solutions together. I think there's individuals inside organizations that like doing that and are good at it. But I think for as many that are as good at it, there's as many that aren't. And I think, that's where, from an organization perspective, if you really want to be successful, in my view, is you have to keep it simple, right? Like you just have to keep it simple because, we can overcomplicate stuff massively now with all of these point solutions and the LLM providers. And, I just
What I do
think,
agree with. I feel like when you look at these AI companies, there's almost like they've just come to believe that it's very complicated to use our shit and you have to engage all this like extra support to be able to get the value from it. And it's like they've almost just like forgotten the simplicity aspect of all of this. And they're like, yeah, you will need a forward deployed engineer. And it is really hard. And I know you don't really get it, but the end result's cool. And it's like, that's a lot. Curious about if you look at the organization today and you look at the customer base that you're serving, you look at the competitors that you're trying to fight against. The podcast we released last week had the CEO of Yext, and he is a SaaS-era company that's 400 million in revenue, 100 million in profit, valued in the public markets at 1x revenue. And he was telling me his point of view is that, listen, as a SaaS-era company today, especially in the public markets, there is a narrative war that's going on. For all of this money that's being deployed in AI, for it to work, one of the things that has to be true is that market share will be taken away from SaaS into these AI companies. And so a lot of money and attention is going from investors towards this narrative to hurt SaaS-era companies. This is almost a narrative war because of the money that's being deployed and what has to be true for that money to provide a return and how to get the LPs to be happy about this. And then from there, they have to actually show that they're eating labor budgets. But the first thing is they have to show that we're carving market share away. How much do you feel this narrative war as a SaaS-era CEO? Like, do you feel it a lot on your side? Because you're an at-scale private company. Like, how true is this?
yeah, I mean, listen, we hear it a lot. I mean, it's you have to be an AI company, right? You have to be a native AI company. That's where all the value is, right? And I asked the question like, well, what is an AI? What is an AI company, right? Like, can I just start a company tomorrow and say I'm an AI company? Hire some AI engineers and build some agents to solve a single problem, and then call myself an AI company. I mean, where's the longevity? That's the question, right? Where's the longevity in all of these companies? Oh, it's interesting. I think it was Jamie Dimon. I saw an interview with him where he was talking about, they were asking him about Anthropic and OpenAI and about all of the hundreds of billions of dollars they managed to raise. And did he believe, that AI would be like, the future to everything? And his answer was, doesn't matter whether you believe it or not. Like, if you want to raise hundreds of billions of dollars, you need to convince people it is. And so it's almost like a self-fulfilling prophecy. I think the reality is, when you actually go look at the stats of the number of people who are using AI today, and then you go look at like the amount of companies that are really using AI, first native solutions, the adoption curve is very, very is slow.
Just to click on the narrative piece, though, if that is so, Jamie Dimon says that, the Yet CEO says it, you're saying it. Traditionally, investors spend a lot of time deploying capital and then talking about markets, right? And operators spend a lot of time operating. I think that's why Topline is successful, because it's operators talking to operators. And so I'll listen to operators and they're like, oh shit, something that like actually helps me make sense of the world. And so how much burden do you feel to put time and attention towards fighting back against this narrative, to saying, okay, there's an amount of thought leadership that I need to now be doing that becomes far more important today than maybe it was a few years ago. Like, do you feel that? I know he does. That's why I'm asking you.
No, I don't, because like I think this will naturally play its course. Like, AI is not going anywhere. It is going to change the way that we work and the change the way that that we operate. But like, one of the things you're building on a foundation of data is going to give you better results, better intelligence, better context. And like I think, you already saw, the stock market. If you look at all of the SaaS companies through SaaS apocalypse, a lot of them sort of, apart from the last few days, recovered, a lot of their numbers. Because if you look at the growth numbers, the retention numbers, the earnings numbers, they're all really good, right? And so they continue to grow, they continue to deliver profit. The concern is that they're going to get destroyed about AI. That's not my concern,
Yeah,
because
there's
what
no
I
churn right now, by the way. Like, there might not be a lot of growth in some cases, but even yet, it's titled very low churn. Like, no
That's
one's
right. And
leaving.
I think, there is more time to evolve than people think that there is. There's this race on, it's almost like FOMO, right? Like, we've got to become an AI company. I need to go AI wash my website. I need to go AI wash my platform, my branding, my messaging. I need to go tell the world that I'm an AI company, and then I'll be worth more money. Until then someone does diligence, and then they dig in and find out, that you've just layered in a bunch of agents on top of SaaS. And really,
Sam, is patience a moat?
Steve Asad's laughing because I wrote an article. We have a big debate about what is a moat and what is just a temporary advantage.
yeah.
Uh, but I guess what your point is, Asad, which is I find myself agreeing with Steve. The the caveat to all of this is how much do you need access to the capital markets at any given time? And if you need access right now, then yeah, you're screwed. If you can wait, if you're printing money, and I hope that Salesloft plus Clari is, but even if you're not, at 30% EBITDA margins, but if you're profitable and you've got good retention, then your customers are voting for you on behalf of the market. And, the famous Ben Graham phrase, right? In the short term, markets are voting machines, and the long term, markets are weighing machines. And the point is, the job is really just to be right for as long as it requires until you do need access to the capital markets. And right now, the moment may not be the best moment for a healthy SaaS business with 20% top line growth and 20 to 30% EBITDA margins to enter the markets. But that just means that that's not the time. I think the core is execution. The core is serving the customer. I don't know. Steve, do you agree or disagree?
100% agree with you, because right now we're in this position where like everybody think that from an investment standpoint, it's like, SaaS apocalypse, SaaS is dead, we need to bet on AI. I think what happens is, as a lot of the SaaS companies make transitions, I think you'll see a lot more acquisitions, acqui-hire type deals, these small AI point solutions getting rolled in to some of the bigger platform providers. And then I think, we get through the other side of this, where we are much more of an AI native platform. And then, investors are looking for, secure, steady, reliable growth. And it depends which part of the capital markets you're accessing as well. Venture will always be, focused on these early stage, high risk, high reward opportunities. And, the LPs that invest more in the private market are looking for more, sustainable, long-term, stable growth. And, I think, but, everybody wants the AI slant now, because, if you're not AI, you're dead, right? And so, I think what we have the opportunity to do is actually, reposition what we do over a short period of time. And, we have a lot of AI capability now, but, it's more about how do we blend that and bring that together so that we create, software of the future. And I think one of the things I always think about is like, how many of us are going to be talking about AI 3 years from now, 4 years from now? Like, or does it just become the new thing that we use and do? I mean, when was the last time someone mentioned the cloud or Internet of Things or big data? And all these were revolutionary to the technology world. And now they just become, a part of our standard day to day. And I think AI is just, eventually going to, layer into everything that we do. And it will just become another, agentic capability that we use and we understand. And I think, that's when I think the real work begins.
Let me ask you a question about your positioning, and then I think we probably have a quiz that Asad is getting us ready for. But the new category, as I've heard you describe it just now, is predictive revenue system. And that's interesting because Salesloft is or Salesloft plus Clari. Is that the official name, by the way? It's Salesloft plus Clari.
Clari Salesloft, but yeah, you can go either way.
Because that seems to emphasize more of the Clari capability. Clari was always about running the revenue cadence, and Andy Byrne used to talk about, the 13-week revenue quarter and how you would structure it. And it came down to analytics and predictive insights. And of course, Salesloft was engagement, was, originally like, how do we build systems so that you can get responses back from people as you message them? It feels like the new positioning is leaning closer to the Clari positioning than the original Salesloft positioning. I would imagine that's intentional. Does that reflect a perspective that you have on engagement capabilities? We talk a lot on this show about how people are taking AI efficiency from operations, meaning cheaper OpEx, and investing in higher CAC because people's attention is there's a fixed amount of attention that can be provided from buyers. There's only so much we can promise about how much people are going to respond to email, but there's a lot that we can promise around how these different signals contribute to our confidence that revenue will actually become, real. Is that part of like the thinking of this PRS, this predictive revenue system?
I mean, it is, and you kind of touched it there. I mean, engagement is just as important as a signal in terms of feeding into, the forecast for predictability, right? So, like, and we don't just think about first-party signals, we think about third-party signals as well. And so for us, it's more about like, what data and insights can we gather from all parts of the sales cycle, from every, conversation. There's been a lot of talk around sort of conversation intelligence. Like I like to refer to that as commoditized intelligence, right? Because it's pretty easy to take a transcript now and interrogate it and get some insight. But that insight's based on that transcript, right? Or multiple transcripts across a company or different opportunities. But I think that just picks up, insights from the call, right? Typically, I'm thinking more like, how do you pick up all of those signals through engagement, through the life cycle of a deal to give you better predictability and outcome of the deals, not only from a forecast perspective, but like what is the next best action that you need to be driving through the stages of the deal so that you can drive better predictability. Because I think forecasting is looking at like the outcome and the end result, which obviously, the more predictable we can make that, the better it is, the more reliable it is. But there's a lot of things that happen through the life cycle of the deal that can give you better insight to change the outcome, right, as you see it. And so I think creating that circular feedback loop and using the context is what we see as the kind of important part and what we think is kind of our moat.
How does this influence your economic buyer and user compared to what was the case for Salesloft before? Is it still the same thing, or has something changed in terms of who you sell to, what budget you take?
It is different, right? Because, Salesloft was typically focused on, SDRs. And I think, if you think about Clari, it was more focused on CRO, CFO, and moving into the AE. I think this kind of brings in and closes the gap, especially with the addition of Copilot, which we will have integrated into Salesloft in July. That kind of pushes us more into sort of AE land, if you like, from an ICP perspective. But from a market size, it's still the same. I mean, Clari was always pretty strong in enterprise, Salesloft more so in mid-market and sort of lower end, in small business. And I think now we can kind of cover the breadth. I think, heavier focus on the AE, a lot more focus on the CRO and CFO. And then I think, we have the ability to be able to, bring that together through the intelligence layer and, be able to serve those constituents better. So I think bringing these two companies together has just kind of enhanced and enriched, the type of persona that we talk to and work with, and really kind of gives a better platform solution rather than, focusing on an individual part of the funnel.
With that, it's time for Quiz Pro Quo. Steve, this is our segment where we have a quiz. It's you and Sam versus me. I have 3 questions for you. Each question comes with some choices, and the two of you get about 30 seconds to a minute to pick a choice. If you get 2 out of the 3 right, you win. You win something big. We won't tell you what you win, but you win something. One day you'll find out.
It's pride. It's
Okay.
pride.
So question number 1 is, in tech in the US, how many people work within go-to-market? This is not just software. This is the broader tech ecosystem. This includes systems integrators. This includes hardware companies and marketplaces. So in this broader ecosystem, which people say is roughly around 16 to 20 million people, depending on who you asked, what's in this entire segment, how many of them are go-to-market people? So option number 1 is 4.1 million. Option number 2 is 2.1 million. Option number 3 is 8.1 million.
Are you including marketing in this category of go to
All
market?
of go-to-market, yes.
And then another game of what, 1.8?
4.1, 2.1, 8.1.
Well, if he said 16 million is the total number, 16 to 20 million. So if it would be 8 million, it would be 50% of all of the people that work in tech are in go to market. Maybe that's true. They said that Anthropic's hiring more salespeople than any other job right now. What do you think, Steve?
I think it'd be closer to 20%. So if it was 16 million, I'd go somewhere whatever the closest number was to about
That was
3
the
million.
4. My initial instinct was the 4 million.
Yeah, I probably would go with a 4.
Look at you guys. These are go-to-market experts. Look at them.
That's where I was going to go, but I wanted to do the math on the 8 just to stress the percentage. I agree with you. Asad, our answer is the 4 number.
You guys are right. It is 4.1 million people work in go-to-market across the US in tech.
Asad, we don't know his sources sometimes. Sometimes he uses a bad source. We want you to slightly...
This is not the encyclopedia. This is LinkedIn data. So this is somewhat clean, is what we're hoping. Now the question is, in this broad ecosystem of technology, who is the company that employs the most salespeople? Option number 1 is Verizon. Option number 2 is Amazon. Option number 3 is AT&T.
I don't think it's Amazon, because a lot of what Amazon does is e-commerce. And so I think Verizon, AT&T, out of those two, I don't know either of those companies well enough. But you've got to think, consumer and B2B mobile and connectivity, it's high volume, high velocity.
Plus, if you think retail locations and you think of like those people at the Verizon store,
I would probably go Verizon.
Yeah, I'm going Verizon too.
You guys are directionally correct, but the choice you made is wrong, unfortunately.
AT&T.
It is AT&T. AT&T has 47,339 people that work in go-to-market across the US. Verizon is 4th at 26,000. Amazon is 2nd at 30,000.
Oh, wow.
Really? I would have put Amazon behind Verizon.
Amazon did a lot of hiring in the last couple of years, like especially in that boom period of like 2021, 22. Just across the board, Amazon went wild. And I think they almost like added 50% more employees in like a 2-year period on a very large base. So yeah, Amazon's big. The last question is Sam's favorite topic, tenure. So what is the median tenure of tech people in go-to-market in the US? Option 1 is 1 year. Option 2 is 2 years. Option 3 is 3 years.
Well, I did see that the average tenure of a private equity-backed CRO is like 15 months now, is it? I've seen 15 months. And so I think a year's too short for a tech seller. That feels too short. What were the other options?
2
It's
and
just
3.
1, 2, or 3 years. I agree with you, Steve. I say we pick 2.
I don't know. I don't know. I'm not sure. I think
there are people there giving people 3 years to like figure it out.
Yeah, probably 2 years. 2 years seems realistic.
You guys,
Depends on segment, but 2 years.
You guys are right. It is 2 years. On average, a person sits in this job, or the median tenure is 2 years in this job. Well, by some people get to spend more time where they are, but some people spend a lot less time. That CRO stat was really interesting. On the private equity side, it's 15 months, which is shorter than on the venture side, that means.
Yeah.
The other part of being a CRO in private equity, though, is that the probability to have had an outcome is greater on the PE side than on the VC side.
Undoubtedly, that's true.
Isn't that wild? Okay, with that, we move to topic number 2. And topic number 2 is actually a lot more about what you guys are going through internally through this combination or this combining of Clari and Salesloft. And you've got a lot of companies that are SaaS-era companies that are thinking that the path to winning this war against the narrative, against these AI startups and all the capital that's flowing there to try to fight against you guys is by consolidating the market, creating advantages through scale, combining large customer bases, combining the cap tables, the P&Ls, like taking those sort of scale-based advantages against these upstarts. And so you've got Clari and Salesloft, which were first not competitors, then they became competitors, as did this entire go-to-market ecosystem. And they're pretty fierce competitors at some point. And so what's the calculus of when you combine two companies that are not complements, but actually almost substitutes to each other? There must be these like competitive dynamics that now there's two salespeople that had to like beat each other in market that are now on the same team. How do you think through that and try to negate the negativity of all of this like competition now, but are coming under one roof?
Yeah, look, that's an interesting point because if you come back to the discussion we have around point solutions, right? I mean, Clari was well known for forecasting, right? And, Salesloft well known for engagement. And, both companies recognize that, you can't exist by just solving a single point in the workflow, right? You have to expand, your reach inside the workflow. And obviously, there's some acquisitions done by Clari of like Groove and Wingman. Salesloft was building out, Copilot and working on forecasting. And I think what you end up with is owning the workflow and you're really strong at parts of it. And then you're not so strong at other parts of it. And it's like which part captures the buyer's imagination and then can you build the rest fast enough? I think, by bringing the companies together, what we now have is, best in breed in terms of engagement, best in breed in terms of forecasting, an increased level of data set, at different points of the funnel. And then, we have an intelligence tool, in Copilot now that can run across both of those and give us a lot more insight. And so I think it's a case of like, recognition that, no different to the AI providers are going to figure this out or are figuring this out already. Solving one problem in the workflow will get you through the door, right? If you only solve one problem in the workflow, it won't keep you in the room, right? Because you just become another tool to manage. And so I think bringing these two companies together gives us that benefit.
Is some of this that the difficulty of acquiring the next net new customer gets harder and harder for everyone in the market? And so we need to think more and more about if we have a customer, how do we do more with them? How do we gain more wallet share? Like, is that a very critical thing that the market is almost underappreciating?
I think wallet share is like the byproduct of helping them solve their business problems. Because, like in the advent of AI, you had to go do something, right? A lot of people went and bought these point solution tools, stitched them together, realized that, at the end of it all, after a lot of work and a lot of money, that they were no further forward. And I think, it's coming back to like, we build software for a reason, right? We hire people that know how to build software for a reason. Because, it's quite easy to get into feature bloat or inefficiencies or hallucinations or errors. Like all these things are possible. And I think, from a market perspective, our job is to be able to go and add enough value through the kind of sales go market life cycle as possible, but remaining focused on the things that we're really good at. Engagement through to close to forecast, that's our kind of sweet spot. Now you could ask, are we going to go move into enablement? Like, are we going to move into other areas of the workflow. And then you have the opposite problem, which is you just dilute yourself. And so what we think about is like, how do we do a really good job with the tools that we have, the data that we have to serve this part, right? Which is everything from, sourcing through to close, and giving you the kind of intelligence, drive next best action, human in the loop, autonomous if you want it, right? Whenever you're ready. And then, being able to create that predictability so that you can constantly, and confidently, forecast where your deals are at. And like that's very hard if you just own a forecasting tool. Like anybody forecasting tool, right? Go take CRM, take what the salespeople tell you, roll it up, you've got a forecast. But that's just based on what the salespeople have told you. Then there's all of the work and the forecast calls that happen that go into it. And we look at like how do we automate a lot of that and gather the intelligence to do it. I don't think you could do that unless you own, the full life cycle.
What happens with culture in a company like this? Sam, what do you think? Like, you and I have not done this before in terms of combining these sort of companies. I'm curious how you would think about it. I have my thoughts, but when you combine a competitor, with two competing firms together, do you think you have to just start culture from scratch and say, okay, like forget what was there in both of these companies before. I need to like define a net new culture here. Then like, do you go about trying to figure out how to do that? Or do you take what you've got and try to like combine it and Frankenstein it into something new and different? Like, what would you do in that instance?
Well, I think, Salesloft merging with Clari is much. I would just differ with your characterization a little bit because it's not. They weren't direct competitors in the same way Salesloft and Outreach were direct competitors. That would be
Fair.
a much
Fair.
harder.
Clary came into this world later on as like an
Yeah,
add-on.
and with an emphasis on predictive analytics and forecasting, and Salesloft was engagement. So I see it as more complementary. But to your point, all what I know about these types of integrations is that if you're not intentional about it, one culture can eat the other without, again, if you're not intentional. So AOL Time Warner, and AOL nominally bought Time Warner, but then it ended up that, Richard Parsons, who came from the Time Warner side, ended up being CEO. And really what happened was that the Time Warner existing people rejected the AOL people. And that was part of what made the integration very difficult. So probably to your point, Asad, and that's what Steve said he did. I think what you have to do is get everybody on the same page as quickly as possible and say, this is the vision of where we're going. It's okay if it's not for you, but let's use this as an opportunity to either commit or to opt out. And then we can, if you want to opt out, we can figure out a good path, and a landing zone for you. I think if you don't do it intentionally, what you get is, you get these sort of rogue cancerous cells in the organism that are rejecting whatever message you're trying to propagate. And if you're not intentional about that, then you can have a lot of problems. But as with anything, and Steve, I'm sure you probably agree with this, but I'd love to hear it from you. Clarity is the most important thing. I think the thing that kills the stuff or creates problems is a lack of clarity around exactly who you're trying to be and exactly what direction you're trying to achieve. And the last thing I would say is, to the point of all of this conversation about market narrative, you really have to define success very clearly. You have to say, this is what, when we see these things, don't worry about all that other noise. When we see these things, that's what we will all know, that we are winning, regardless of anything else. In fact, that's probably a lesson I need to give to myself for my own organization, because the lack of clarity on what does winning actually look like is the thing that freaks people out.
Yeah. I think clarity is one thing. I think ego is another, right? Like there's no room for ego, right? Because, it's not about what it will be. Because to me, it's not about which was the better company, had the better product, had the better culture. Like that ship sailed, right?
Because
Like the
you actually
company.
aren't the founder of Salesloft. So like in a way, like you
What?
wouldn't care the way that if a founder acquired another company. In that case, it's like we are the better ones. You are acquired by us.
Yeah,
Yours is a little bit more like a capitalist being like, I think these are both great assets coming together. That's so interesting.
yeah, and I think like you've got, and this is where I think it's important for the people in the organization to understand. And I'll lead with open, honest, authenticity, transparency, right? And on my very first all hands to the company, my message to people was, it's okay to not to want to be here. right? Like it's okay. You didn't choose to be part of the merged organization. You chose to be part of Clari or Salesloft. I've come in, I don't have a biased view. So I don't think about which company was better, which product was better. I think about what can we do going forward that's going to be better. And then if you think about our C-suite are all new, right? And they're all people that know how to work, build, scale organizations. Our CPO specifically, comes from Salesforce, revenue cloud background, so knows this space really well, which for me is the one role that's most important to understand this segment. But from a culture perspective, it's like you either believe in these combined companies going forward and you believe in what we can achieve, or you don't. And either way, that's okay. My job is to find the people that believe, and take them on the journey. And the people that don't believe is to help them find a new opportunity as fast as possible, because that's what will drag you down.
Do you worry, Steve, about I'm really struck by this the point that you're making around it's an entirely new executive team that you haven't worked with either before. So I think there's a big danger zone, but I don't know if you agree, so feel free to strongly disagree with me if you want, that what I've seen when new executives come in is an undue appreciation for what came before. There's the tendency of, they look under a few rocks and they're like, God, this was an absolute mess. And then they discredit all of the work. And so what you lose is institutional knowledge, because they assume everybody was an idiot before me. I know you've talked about ego, so I'm sure you've hired people that wouldn't say it this way, but paraphrasing for speed and brevity, everybody was an idiot before me. We're going to do things new. And when you have an entirely new team, there's probably a lot of good stuff from both sides of each organization. How do you make sure that that stuff doesn't walk out the door? Because it's okay to want to have a new strategy, a new vision, but if you've got demand generation workflows that are working, if you've got enablement workflows that are working, you don't want to just throw them out the window and have to start everything from scratch. But you do have a brand new executive team, and you actually are still getting to know them as much as they're getting to know you. So how do you think about all of that?
Yeah, I mean, look, it's an interesting point and something I think about and I get asked a lot. It's about like institutional knowledge, the way that each company operated. But like now more than ever, like we're in an era of transformation, right? Like you merge these companies to build something that is better. And you can always pull on pieces and parts of what people have done before, but that doesn't always necessarily fit and scale for what it is that you want to do going forward. Like if you take our engineering function before, both companies run engineering functions, both companies had offshore, both had their own SDLC processes. Now we're agentifying the whole, development approach. And so we need new process. The challenge then comes, and this for me is the trade-off, is if you have people that existed in one of the companies that believe strongly in the way that they did it before, you end up in the other problem, which is, oh, well, we did it great, you didn't. And so now what we're going to do is get you to do everything the way we did it. And then all you now end up is a larger version of one company, rather than, taking the opportunity to say, well, if we're going to collapse these two teams together, why don't we take the opportunity to reinvent the process, right? And reinvent the approach, but understanding, what we did in the past, so we don't, get rid of the good, right? We take from the good parts from each part. You can only do that if you have an impartial view. So I think, if you find good people with experience that know how to do this at a low ego, then you get the opportunity to move at speed, right? And I think speed outweighs everything else, especially now, right?
You have a different level of tolerance for ego based on the function. The premise of the question being, do you want a CRO with zero ego? Like, or do you want like an enterprise sales team that is like zero ego? Like sometimes the best ones have a little bit of a chip on their shoulders.
I mean, look, that's a really good question. And I think ego is okay in the right environment, right? Like, a sales leader, is rallying a sales team who's out, wants to go crush the market. I think, having some ego and some desire to go win. And, I think that's a great thing, right? And that's a great thing inside the sales team. But when we sit in an executive meeting, like I always tell my team, like it's this team first. Like it's not about what the CRO wants or the CPO wants or the CTO wants, right? It's about what's best for the company. So park your ego at the door for the executive conversations where we're making the decisions, and then use your ego, where I consider myself to be pretty low ego. My family tell me completely the opposite.
Very nice.
Like, there are times where, a little bit of ego is okay. But there's also times where, being able to sit there and be objective to a situation and not just think about your own views, your own wants and needs, or your own functions and needs, gives the team the ability to move fast.
Sam, on this, we hear everyone talk about founder mode and the founder advantages, and Lemkin's like the founder leaves, I liquidate my stake in the business. People feel that a SaaS-era business, the only ones that have a shot are the ones where the founder is, because you have to like reimagine the business and only the founder has the authority to do it. And obviously, I'm not a founder. So when I hear that, I'm like, that sounds a bit silly to me. Here, you get to see some of the built-in advantages of being the non-founder CEO of a business. Some of this is very compelling, no?
Of course, I think everything is a risk return profile and where you sit on that spectrum. And it depends what your incentives are. And if you're a venture capitalist, I think this has been proven true more so in this last cycle than at any time I can remember. At least for me, it's because it's been so visceral, which is that if you're Founders Fund and you're in SpaceX and you're in Anthropic, you won. You've won. You've made billions and billions and billions of dollars. And if you're not an Anduril, SpaceX, Anthropic, OpenAI, then you've barely, in most cases, you haven't beat the S&P. And in fact, the S&P has beat you by a factor of 5 to 6 over the last 5 or 6 years. Why am I saying that? The way to get asymmetric outcomes is probably still to have the founder running the business. And the way that Jason Lemkin or venture capitalists make money is they need a fund returner. They need power law dynamics. And the problem is that, or the issue for the rest of us is that if we work in one of those businesses that isn't going to be part of the power law return profile, we still want to run a good business and we still want to generate outcomes for our investors. So what I would say, by the way, Asad, you're a little bit different because you're on text with your founder every day and Jamie's always in your ear. So it's not quite the same thing. But I would say, I agree that if you want trillion-dollar outcomes, you're still going to need an Elon Musk, who is the founder of most of those companies. But if you want 3x your money, then there's still lots of great operators like Steve that you can bring in to run and build great businesses. And Steve, I don't mean to say that you won't get 5x or 10x on your money, but that it's we have to understand the incentives of the people that are pitching these ideas. And the reality is there's lots of great return profiles. That's why private equity exists, that are not venture return profiles. And those require steady operators that can do things like Steve's talking about, which is bring disparate teams together, execute on a core vision, and build enterprise value. It may be that Steve is not going to be the guy that
Because they
puts
don't also risk it going to zero. Like, when private equity buys something, you can't risk the zero. Whereas on the venture side, you can stomach many zeros. You're happy with 6 or 7 of them out of 10. Whereas like in PE, if you had 5 zeros, you're dead. There's no resistance.
But there's also a question though of like the difference between founders, right? Because like it's one thing to go build something from the ground up. It's a different thing to go cannibalize it and completely transform it into something different, right? And sometimes emotional attachment. I've been involved in a lot of M&A, met a lot of founders over the years, and sometimes the emotional attachment to the product, right, or the company can sometimes stop you making the right decisions that you need to make to transform the business. And that's where it can be unhealthy. But, if you've got a founder that can constantly, evolve and change and adapt and is comfortable in that mindset, then that's a different skill set altogether.
Bulls versus Bears.
Our last segment is bulls versus bears. It's a very simple segment. I'll ask you a question and you're going to tell us whether you're bullish or bearish about that thing. We will start with Sam so you get a feel of this. Sam, are you bullish or bearish about email as a primary tool for salespeople to use to engage the market top of the funnel?
bullish.
Why?
What's the alternative?
I have an idea. I'm starting to think that voice is going to become a bigger and bigger part of what we
So,
do.
but when you say voice, you mean people leaving messages on my phone?
No, I think like the way that we go back and forth, like voicemail, but designed for this new world, not like the downs, like not like what we have today, where voice was always an afterthought because the technology that enabled it wasn't that good. But like after seeing that Thinking Machines demo, where it just was so, the speed at which that thing was interacting was so quickly, you can imagine a world where in a year or two or three from now, you're using voice to do a lot. You see it in companies right now where you go and like the engineers are whispering into their computer and building code. There's some pretty big platform releases that have happened where people have said, I haven't typed a word of code, I've just spoken to it. And I wondered like what that, I'm not sure, but I do think that's going to influence what we know as email today and will then influence what salespeople are doing to create opportunities. That's my thought.
My response to that is, which I will
Whenever
be.
you say that, it's like, that's a really dumb idea. What response to
Not a
that is
dumb-
that's stupid.
Well, you haven't shared a specific idea. You're like, voice is important. Okay, I agree with you.
She was like, yeah, that's dumb. Okay, Steve, now that you have a flavor of this, curious what you bullish or bearish about Salesforce?
Oh, bullish.
Tell
Bullish.
us.
I
Give us your
think
thesis.
I think we have such a great opportunity now. We've kind of brought these two companies together with the tech that we have, with some of the level of experience that we've got in, some of the things that we have in the pipeline that we're building. But I just think we have a huge opportunity, and that I cut through the noise of like, you know, all the AI startups and all of the AI native companies coming in, you know, and I see a path for us of how we agentify the platform, you know, and create something, you know, that is great for mid-market companies, small companies, enterprise companies, in a way that you can consume it how you see fit, right? Headless through our interface. Yeah, our MCP server's currently live. We're getting a lot of traction on that already. So, you know, I'm bullish. I think we've got a great opportunity.
We hope so too. Salesloft holds a very important role in this ecosystem's history and go-to-market's history, and it'll be such a cool story if it just keeps growing and growing.
Wouldn't it just? Or won't it be?
Steve, thanks so much for being our guest on the show. It's been great to have you. Asad, thanks for being my friend and for sharing lots of unstructured but interesting ideas.
I will do that for the rest of time.
Appreciate the invite, guys. Thanks very much.
Thanks for coming on the show, Steve. All right, everybody. We'll talk to you next week.